Hello guys, and welcome to my YouTube channel once again. So in today's video I want to show you guys a very simple strategy that you can use to scalp the market and make some good profit. All right, it is going to be very simple. All you have to do is to watch this video to the end and try to focus as you are watching this video. Don't be distracted, because everything I'm going to say here is very important to help you succeed with this strategy. It's a very simple strategy, and it's something you may know then you overlook, because some of you think that the simple those basic stuff in trading, they do not work. I remember when somebody told me that resistance and support, they do not work. Trading support and resistance doesn't work, and I was like, maybe you do not know what you're saying, or you don't know how to actually use it. So we are going to use very simple stuff, the support and resistance here, to trade, to see how to trade boom and crash, and even any other pair. All right, so the first thing we have to do, let me just remove I think I have some drawings on this. Let me see, I have some drawings, only 8. Okay, then let me just show you guys. It's very simple. So the first thing you look at if you want to trade this particular with this strategy is to look out for where the market is consolidating, or where the market is refusing to go beyond. Like, let's say you notice market has always been dancing around a particular area. We have something like this. Let's say we have you notice the market has been doing things like this. Each time it comes here, you see it is just dancing around a particular area, and all you have to do is just to wait for the market to close above this area. There has to be a break and close above this area. Once there is a break and close above this area, then you enter a trade. And you take the trade to, depending on how far the market traveled before it started consolidating. I mean, this other side of the chart. Then all you have to do is to just take your trade and look for any possible resistance zone around here. You take your profit, or a supply zone around here, you take your profit. All right, and you make some good profit. And also you have to also consider the fact that the market will sometimes try to retest after breaking out. You might want to retest this zone, then it continues buying, and this thing has been happening all over the chart. These things are all over the chart, as simple as that, and you can make some good profit. Sometimes what you be trading, the distance may not be too much. It might just be 3 or 2 candlesticks, and you get some profit and you step out. All right, then your stop loss will just be somewhere below here, around this point. Then your entry should be somewhere around here. You take your profit around where you have a supply zone or a resistance level or key level around this zone here. All right, so on the main chart, this is what we do. Then, okay, let's just look at it first. Let me get the outline too. Now you can see we have things like this. Now I will prefer we consider the higher time frame. We consider at least the 1 hourly time frame, just like this. Look at the 1 hourly time frame. What we have, look at here, we have something that this is actually a consolidation. The market was not able to break above this zone. You see, each time it sold, the first time it sold to this level, then it bought. You can see the rejection here with this 1 hourly candlestick. This is the rejection here. The next candlestick, which is bullish, couldn't go above this level. The next one couldn't still go. Then this one also didn't was not able to go above it. This is the only candlestick that broke above it. After the market breaks above this strong zone now, because on the 1 hourly time frame, you can see this is actually a strong zone. The market bought from here and also sold from here. After buying above here, all you need to do, once it breaks above, you can enter the trade on the close of this candlestick, if you are not patient enough to wait for the market to retest. But if you are entering your trade at this point, then your stop loss should be below it, because the zone we have there is actually this. It has to be, your stop loss has to be below the zone. All right, but to be on the safer side, it is best you wait for the market to come back to the zone to do a retest. Once it comes to do a retest, you take your trade. This time around, hold your trade and know that it's going to go above this, beyond this high. Then you can target this zone here. You can target this zone here. You make some profit. It's as simple as that. Then if you look, this is a minimum lot size for boom 500 index. Let's say you enter a trade on the market getting to this zone, you take your profit around somewhere here. This is about 10 US dollars. Excuse me. This is just about $10 for a minimum lot size. So if you have a good account size, let's say you're using 1.0, you know this is actually 50 US dollars in profit, holding the trade from here up to this level. All right, this same small distance, somebody, a trader with a good account size can still make $500 or $1,000 from it, guys. It's very simple, and this is the 1 hourly time frame. All right, and you may even have to go down to you may want to go down to the 15 minutes time frame to see a better time to enter. But trust me, this setup is actually the main thing you should be concerned. Once the market is able to break above a zone it has been struggling to break above, then you wait for it to pull back to that zone, you take an entry. Or you can just, there are times the market doesn't like, for example, now you can see the bullish candlestick that broke above this zone was too big. That's why it came up here. So for this reason, you might want to really wait for the market to pull back because your stop loss is going to be too large. If you enter here, you'll be in a deep drawdown and your profit is going to be too small if you want to take profits here. So in that case, if you see a situation where they break and close above, the candlestick that breaks and close above is somewhere just around here, then it's better to enter the trade immediately on the close of that candlestick. Immediately on the close of that candlestick, you can just enter the trade here, knowing fully well stop loss will just be a little below here. All right, so then let's check other examples. Excuse me, there's another example right here, guys. There's another example here. Look at what's happening here. You can see that the market has been consolidating around here, finding it difficult to break below this zone. It couldn't buy and it couldn't sell. It was just consolidating on this 1 hourly time frame. You can see finally the market closed down here. Finally, a bearish candlestick closed down here. What happened after? The market just tried to buy a little for a retest and it started selling massively. Where would you take your profit? You can take your profit here where you have a strong zone here and you make some nice profit, guys. These things are all over the chart. You enter your trade there at that point, you take your profit here, 13 USD in profit. And besides, the market is actually bearish. So since the market is bearish, you can really see this as maybe a pullback. You can see this as a pullback. Then for that reason, you can hold the trade to go beyond this level, knowing fully well to go beyond this level, since the market is actually bearish. All right. So let's keep looking. Let's keep looking. All right. Then we have another one right here. You can see what is happening here currently. The market got to this zone and it's been struggling to buy above this zone. You can see that this zone is also in line with what we had here. You can see. So all we have to do now, since the market has been struggling, has hit this zone about how many times? This is the first time. This is the second time, then it pulled back. This is the third time, and we are waiting for the market to get to this zone again. Now, if the market can get to this zone and break and close above it, guys, it's going to be spikes. You just take the spikes, and you can take your profit around here. You can take your profit around here, and then you're done. All right. But for the fact that the market is this is like a triple bottom now, if the market can nicely go above this zone, I think it will buy above this weekend. It wants to change direction. All right, so you can see it's very simple. It is very simple. You just be patient and wait for the market to give you that confirmation. Okay, it's ready to buy or it is ready to sell. You can find this on any time frame. Simple support and resistance. If you don't have the knowledge, you will always be a victim. All right, so you need to understand this. And also, when I talk about closing above and closing below, you have to consider the time frame you are seeing it, because most times you'll be seeing fake outs, especially if you are drawing your zone such that you are only touching the bodies of the candlestick. That is when you will have that problem. If you are drawing the zone such that you are only considering the bodies of the candlestick without considering the wicks, you will see that after you see that there's a body close maybe above here, you might want to take the trade, considering and without trying to confirm if there is a wick around above where the market closed. I don't know if you get the point. Let me illustrate. For example, now let's say we have a candlestick that closed let's say we have a wick that is up to where we have this line, then the market closed around the market closed bullish above the zone here. I just hope you understand what I'm trying to illustrate. Let's say the candlestick wick got up to, we have a previous candlestick that had a wick that got up to this level before it sold back into the range. Then we have a new candlestick that closed above this zone. Mind you, closed above this zone. Then there is maybe at this where we have this little rectangle here. Do not be so quick to enter the trade, because as long as there was a rejection around here As long as there was a rejection around here, the market can still reject from this zone and fall back into the range. Then you will see it as a fake out. Then you will feel support and resistance doesn't work. So you have to consider the wicks of the candlestick when you are trying to trade support and resistance. They are very important, guys. They are very important. All right.
All right, so you can also do this on the 15 minutes time frame. Like if you go to the 15 minutes time frame, you can also do that. It's very simple. Just look for where market is consolidating. Wait for it to break out. Let me just find one. Okay, this is the first one we marked here. And let's see. Okay, look at another one here. This one on the 15 minutes time frame. You can see market has been consolidating here. Then finally we had a breakout and the market retested. You can see the sales. So even on the 15 minutes time frame, these opportunities also happen. So all you have to do is just to follow it up and you'll make some good money. All right, look at here, there was a consolidation here, market broke out, then it bought. So you just look out for where market is consolidating. All right, once the market breaks out of that consolidation or where market has been resisting, kind of either to buy or to sell beyond, just wait for it to finally break and break above it. Then you can take on get an opportunity to take some trades at that point. This also happens even on on volatility indices. If you check, let's see one volatility indices to look at. Okay, but I mostly consider these things on a more higher time frame, like the one, at least from the 1 hourly time frame. If you want to look at this kind of strategy, if you look at it on the 1 hourly time frame, it's even better than the 15 minutes time frame. Although the 15 minutes time frame also works, but the higher the time frame, the more accurate the setup you see. All right, so we can still find setups on the 15 minutes time frame. Let's see closely. We can see there was a consolidation here. That market was rejecting this zone. You can see market was rejecting this zone. Finally it closed above it and it bought. All right, and there's another one right here. There is one right here at this point where market has been struggling to buy above. You can see the rejections here at this point. So finally the market was able to break above this zone and close above it. It bought immediately. One problem you will have is if the retest does not happen immediately. It depends on your level of discipline. All right, you can decide to tell yourself until you see a retest, you're not going to take any trade. That works. Or if the market does not retest where you actually expect it, then you can wait for the market, like you see it bought above, it did not come back to this zone to do the retest, but it retested on another zone because it's another zone here. Then you can take the trade. All right, but if you find out that where the market is, you are not too sure of where it is actually retesting, you can just skip the trade, skip it and look for another pair or wait for another opportunity so that you don't make mistakes. All right, that's one of the things you have to train yourself to do. And like I said, I prefer looking at these things on the 1 hourly time frame. So let's check the 1 hourly time frame for this particular pair. Let's check the 1 hourly time frame. All right, okay, see what we marked here is even more better here on the 1 hourly time frame. So meaning if we were considering it on the 15 minutes time frame, there is a very high chance of making mistakes. But here on the 1 hourly time frame, you can see how it worked. So the market finally broke here at this point, came back to retest, then enter the trade. And mind you, this kind of pair is very, very volatile. You know the way it works. This is a very volatile pair. If you can find an opportunity on this pair on a higher time frame, then you stand a chance to make some reasonable profit, guys. So you can just practice these things on different pairs and on different time frames, then backtest it, and then try with your demo account before you think of trading on your real account. Right now, you can see there's a retest. There's something that looks like a retest here, and we are expecting the market to buy based on what we see here. Based on what we see here, the market has finally broken above this zone, and we see this as a retest, and the market will possibly be buying. So let's just see how it goes anyway. And then, meanwhile, subscribe to this channel if you've not done that yet. Today is Wednesday, the 26th of March 2025, and we'll be having our free masterclass at 5 p.m. Nigerian time. Sorry, 6 p.m. Nigerian time. If you are not yet on the Telegram channel, do so, because all the information will be posted there. It's going to be live on Zoom, guys. So like this video, share your thoughts in the comment section, and see you guys in my next video. Stay blessed and peace out.